folks, welcome to the Rain Channel. I'm joined today by good friend and trusted partner, Simeon Papailias with REC Canada, one of the founders and CEO. Simeon, thanks for joining me, giving me an update. What's going on in Toronto? We're going to get to work. What's going on in Toronto, GTA? So many changes in real estate. It's all doom and gloom. The world's coming to an end. Tell me it's not. Give me some insights.
First, thank you for having me. My pleasure for being here, and an honor to speak to your audience. This is all serious real estate investors. So this is what we do. This is what we follow every day. It has been a very interesting beginning to August. The stats came out for July that are starting to tell the tale a little bit more accurately, because there were some really quick ups and downs due to the interest rates moving and all the things. Seasonal adjustments as well, being the spring market going into summer. So there was a lot of action, a lot of assumptions being made, and a whole lot of jibber jabbering that means nothing to investors. So what I want to do tonight is unpack some of that as to what it actually means to us as investors and how can we make better decisions. The stats indicated for sure a slowdown in activity as a result of June and July's interest rate hikes. Obviously, to no surprise, I think what the government was trying to do has happened, no doubt about it, actually. I was speaking to some of my sources, specifically Urban Nation out of Toronto, which does the condo stat reporting for the whole country, the big urban markets anyways. And some of our sources, including AirDNA, to take a look at activity of short-term rentals, and they are down almost 30 to 40% year over year in bookings.
Wow.
As residential regular rental has skyrocketed, obviously, in price and in demand. Short-term rental, which is the indication of liquid money to spend, people staycationing and going up north and doing all the things, sharp decline. And I'm sure, I'm happy to hear feedback from your investors, Patrick, whoever does have short-term rentals, to give us their take and their actual anecdotal evidence as to what their properties are doing right now. Because this is a very big study. We're not talking about 10 homes. We're talking about a couple thousand units up north. And that report's coming out. So we know as a fact Canadians are feeling the pinch. Even though they were still spending up to a couple months ago. Boats, pools, luxury goods, consumer spending was still there, which is why they did it. Right now, we know as a fact that they've cut the air out of those lungs, and people are starting to face their actual realities. So it's a positive sign to future interest rate hikes, meaning I don't anticipate September to go up.
Yeah, I think it's, something, and I don't either, but I'm so guarded around even making any call because, at the end of the day, the Bank of Canada, federal government, they're doing things that are just really make no sense. And we can't understand it. They talk about raising interest rates to slow the housing market, for example, or the economy, but they're still, got record immigration coming in. We continue to have something that I said 2 years ago when these immigration numbers really started to spike. And I said at the time, immigration itself will drive inflation in a lot of ways, simply because you've got, let's say, 1 million people coming into the country. And what are they doing? They're setting up house. They have to, at some point, they got to buy stuff. And that's going to add.
They got to go to IKEA. They got to go. Yeah, they got to go to the car lot. They got to do things.
Yeah, so it makes me crazy. So
I'm not looking to make a prediction at all. I'm speaking the truth that I see from the ground. This is an on the boot segment, like boots on the ground segment.
Yeah.
And what I'm seeing from both the economists that we speak to consistently and what we're seeing in activity, I believe when the numbers come out to the government mid-month and they start seeing what the impact has been for June, and then in September or July, I think we're going to be pleasantly surprised with them saying enough. We can't choke this any further. If they do, I definitely will tell you there's going to be some blood on the street from both investors and end users throwing the towel.
It will be
So
devastating. I agree. You know, I'm having to renew a commercial mortgage on light industrial, and I get my options, and my best bet is a 5 year at 8.5 or 8.75%. I'm going, are you kidding me? I want to say 1 year is 9.25 or something ridiculous like that. Anyways, we just see what's going on, and of course that impacts everything. I mean, the good news with my real estate, it's mature. It's got very little mortgages on it, but a lot of investors aren't in that position now. What we're seeing in Toronto slash GTA is listings are starting to come up. Now that's historically been the problem, is that there haven't been enough listings. We're starting to see listings come up. How are you reading into that, Simeon?
so again, specifically yesterday and today, I put out, if anybody wants to Google Simeon Papailias Toronto Star, you're going to see I spoke to Clary at the Toronto Star about exactly this. That report came out 3 days ago, talking about the increase in inventory since the Toronto Real Estate Board put its numbers out. And we're seeing 3 months of inventory. 2 months ago, we were at 0.75 to 1.25. So they're saying, what is this about? Somebody break this down for us. And the truth of the matter is that this is investment real estate being repositioned. After a year and a half of taking a beating, a lot of people don't want any more lumps. A lot of people must reposition because they cannot take any more lumps. And then there's the others who just follow blindly. So right now, we've spent, both my partner and I, for those who don't know, Jazz Takar, who runs our actual internal sales division for the Investor Insiders, and I are taking what we call REAPs, Real Estate Action Plans. These Real Estate Action Plans is where we sit down. Hi, Patrick Francie, tell me about your portfolio. If we don't know you already. If we know you already, tell me how this is doing. Where is this at? How is this doing? And we have 11,000 Patrick Francis inside our world, our ecosystem.
Yeah.
So we are taking intakes every single day with people saying, listen, man, I can't do this anymore. But the good news is that most of our clients, and this doesn't affect everyone, but most of our clients are seasoned. They're mature portfolios, as you said a second ago. So I was speaking to Joe and Susie this week, and we have 4 units. They have a place in Peterborough. Funny enough, we were talking about that when I saw you last week at the incubator. They have a property they bought in 2009 in Peterborough. They have 2 condos they bought in 2013 and 2014. They have 2 condos that they bought in 2018 and one in 2020 that hasn't closed yet. So anecdotally, now we're still doing a market update, guys. This is a market update. How do you behave and what do you do when the market comes for you? And in this case, anything they bought after 2013 and 2014, because those were bought at condos downtown Toronto were $300K at the time. Those are now renting at $3,000 a month. They're cash flow positive by $1,000. Nothing to worry about. The one they bought in 2018 was $600K. The one they bought in 2018 with a mortgage of $500 or $475, with a mortgage payment of $3,000 at 7%, and condo fees of $500 and taxes of $200 is sinking them. Because it's not like their income went up astronomically, and it was never supposed to perform this way. So what do? Well, the answer might surprise you. What I advise my clients to do, and this is a very real situation, is I'm going to go back to their oldest asset. The one that has been in their portfolio since 09, whenever they bought, 06, 09, whatever they did. That's worth $800-900K now. They bought it for $150, $250, I can't remember off by heart. Doesn't matter, not a penny over $250, let's say. But it's sitting on $500-600K in equity. It did its job. As an investor, you never lived in it. You bought it. You held it. You did what you needed to do over the past 10, 12 years. It did its job. Let it do its job again and give you that liquidity that you seek for the rest of the portfolio now to do its job. So by funding, again, My opinion, not to be advice. I don't want, like, I'm not the guy who says jibber jabber.
Of course.
This is the advice that I give my clients,
Mm-hmm.
where I'm responsible and I have fiduciary duties to them. My advice is they've bought blue chip real estate, AAA locations. It's okay if you're bleeding even $800 a month, because the market right now, this is fact, prices and sales volume were up in Greater Toronto Area in comparison to July 2022.
Mm-hmm.
After 8 increases since that date, 4.2 and 7.8 respectively. So in a year of doom, the market went up by 5 and 8% respectively, Toronto GTA. So this is the most resilient market, not because it's cooler or better looking than anything else, but
Mm-hmm.
because in exactly that time frame, the population in the GTA went up by 500,000 people.
Yep.
So if that is to be true, I'm going to advise my client to sell Peterborough, take the liquidity, have dry powder in your tools, have dry powder so you're sitting with no anxiety. Service these mortgages,
Mm-hmm.
rates will come down. Whether it takes a year, 2 years, I don't care.
Yep.
$800 a month is 10 grand a year,
Mm-hmm.
20 grand over 2 years.
Mm-hmm.
If the other real estate did its job, reposition. If they didn't have the luxury that this couple had to take the old asset and reposition,
Yeah.
well, my friend, you need to sell.
Mm-hmm.
And you need to sell now, because you're not going to throw the baby out with the bathwater.
And I guess at that point you're going to take the loss probably, or quite likely, depending on your timing.
There's a very fringe market. There's a very small. If anybody who bought in 21 selling in 2023 might actualize a loss.
Yeah.
But even from 2020, the margin of growth was so significant that even in a market that's done what it's done, they're still not losing. So there's not many. Like, we cannot sensationalize a small margin of people.
Yeah.
So that's what's happening on the street. Sentiment is low.
Yeah.
Confidence is low.
Yeah.
And we are on the rooftops yelling, stop listening to nonsense. Focus on your individual circumstances, and let's take a holistic approach to what can be done in your portfolios.
There's a couple things around this too, I think, Simeon, is that, you and as an organization, REC Canada, you and Jazz have built a business around doing things really kind of, I'm going to use the term, the right way. You've supported investors. We've had these conversations many times. Nobody's coming in saying, I'm going to buy a pre-build and, I'm going to literally rely on being able to assign that deal for a profit in the future. You actually will walk away from the table and going, this is, we're not probably the best brokerage for you. If that's
because that's a speculator,
yeah,
and they're putting themselves in the line of fire.
Yeah.
So, and what happens with those kind of speculators, if they win, they praise you, and if they lose, they point you.
Yeah.
And I don't have any appetite for that. I didn't put 17 years in to make one transaction in the case I win. No, thank you. No, thank you.
So when we look at the overall market, I mean, you pay attention to the national market and beyond. When you look at what's going on, even in the kind of national economic market, single family, what are you? Any insights that you would share in that regard? Like, I'm looking at what's happening in Calgary. We called Calgary 4 years ago, and of course, Calgary is doing what we knew Calgary was going to do, as one example. Interesting, and just for conversation, I'm looking at Edmonton, and Edmonton's pretty flat. Historically, Edmonton kind of follows Calgary's lead about a year later. So I'm paying attention to it, and I'm going to throw a political jab in there. But Edmonton went 100% NDP. Calgary, I think, is all but one riding, is UCP. I think this is going to be a battle of the government, and it's going to be an interesting outcome. I don't know what's going to happen ultimately with those two cities. But anyways, my point is that I'm looking at what's happening in Alberta, other than Edmonton. And I have to say, and I'm born and raised in Edmonton, other than Edmonton, Alberta's looking pretty hot in the real estate market. Vancouver's still doing some great stuff. I don't know. What's your thoughts?
So I'll start just quickly. Vancouver and Toronto are brother and sister.
Yep.
Uh, Anything you see happening in Vancouver is going to happen in Toronto and vice versa.
Yep.
They are extremely tight inventories. They're both landlocked, meaning Vancouver has a mountain behind it, an ocean in front of it. Toronto has a lake in front of it and a green belt behind it.
Yep.
We're not going to touch Doug Ford in the green belt today. Maybe too soon. Too soon. Um, but what I will say, Vancouver is again blue chip for any investor who can afford to buy Vancouver, who can afford to buy Toronto. It's a As far as I'm concerned, it's a no-brainer. Those are trophies in your portfolio. It is extremely difficult to lose should you have the fundamentals in place, of course, of location and picking the appropriate node of where you want to invest in. But Vancouver and Toronto will by 10x outperform any market over
Yeah.
the long term.
For sure.
Period.
For
Period.
sure.
So I don't really want to speak because for 80% of investors, they're outpriced of those markets because
Yep.
either they've done them and they're now tapped in those markets,
Mhm.
or they're simply out of touch. Now, Alberta is doing what you called Alberta will do, and Alberta inevitably will once again do what it's always done. Alberta, as far as I'm concerned, is 100% a cyclical market, more predictable than any other for its ups and for its downs, because it's no matter the diversity, no matter what they do, when you're sitting on millions of acres of oil, it's really hard not to be an energy province.
It's true.
Just call a spade a spade.
Mhm.
So for our lives, for the rest of our lives, I can assure you that diesel fuel and gasoline still very much run this planet.
Yeah.
Not looking to offend anyone, but batteries are doing their thing. But battery production relies on fossil fuels.
It
For
just
those who didn't know.
does.
So I'm not making a mockery or a joke of it, but I'm just saying Alberta is on a high. Alberta will be on a high for the foreseeable future.
Yeah.
I would say be very cautious how you invest in Alberta. Use local experienced professionals who understand the fundamentals. Like, don't tell me you bought in Calgary. Calgary has 1,700 micro markets. Tell me you bought by 7th Ave, on top of the Sky Train or whatever that train is called. I need to know that people are still taking in the fundamentals. Don't be seduced because you're from Toronto or from Vancouver. You see condos from 290. Well,
Yeah.
maybe it's worth 180, homie. So
It's
don't.
That's such a great message, by the way, Simeon, because we see a lot of Ontario money going into Alberta, into Calgary, buying pre-construction condos, and I've said right from day one, Calgary. If you're dealing with a realtor that really knows that market, you're probably okay, but plan on getting out. If you buy a condo in Calgary, plan on getting out in 5 years, 6 years. Get the hell out. That's just the nature of that market, and I'm very clear on that. And I've got lots of experience in that market, but there is opportunities. But to your point, don't just arbitrarily start throwing money at condos in Calgary. It's dangerous. Don't do it.
I'm not even saying it for fun. I know what's taking place in my city right now.
Yeah.
The REC has not done a single, not one launch yet in Calgary on a mass scale, meaning when we do 30, 40, 50 units at a time,
Yeah.
for the simple reason that every time we go deep into our due diligence, we run into territory that is uncharted for us, which is to us, again, it's an instant disqualifier.
Yeah.
So if I can't speak to the neighborhood next to me and how it performed 8 years ago, and I don't have access to that board to get the data, guess what?
I'm out.
I'm out.
I'm out.
So if you are, I'm not saying don't invest in Calgary by any
Sure.
means,
Yeah. Yeah.
but I know at least 4 very prominent brokers that I call my brothers and sisters here that have taken a part in many launches,
Mhm.
and they have put hundreds of units together. And I can't speak for them. Maybe they did, maybe they know, but my guess would be there is no way that you could possibly do that many deals and know where you're putting your clients.
Mhm.
You took a call, you actually took the order, you were an order taker. So Patrick called you, said, I want a condo in Calgary, and you sold him a condo in Calgary. And in 3 years, when that's coming to occupancy and the appraisal is 30% short,
It's trouble. Trouble.
remember my name.
Simeon, I always appreciate your insights. Any kind of final words? Like you and I are both looking at the markets, and I'm suggesting that investors keep chugging away. There's no race. Keep paying attention. There are motivated vendors that are showing up time and again. To your point, keep some powder dry. Make sure if you've got an existing portfolio that you've got some liquidity. That's something you got to really always pay attention to. But ultimately, there's opportunities that will continue to show up, and you just got to keep kind of grinding away at it, and don't get discouraged. I know that we're in August, everybody's taking a break. Got it. That's okay. But also start to prepare for September when things start to ramp up again, because they will. And ultimately, it's a time to be reaching out to brokerage like Simeon, like REC. Talk to the team. Say, listen, this is what I'm doing. Here's where I'm going. Start to get those balls in play today, and be ready to kind of kick things off when the market starts to go up again. But you got to plant those seeds today. And
So
that's my guidance to investors who are just sitting on the sidelines. Take the summer off. I got it. I'm all about taking some time down for sure, but don't stop. Keep things moving forward, nice and slow, so that you've got some momentum going into the fall.
my final words to that are not only to reinforce what you just said, this is the time to invest should you have the capital.
Mm-hmm.
For anyone sitting on capital right now, the next 6 months are going to bring more opportunity than you've seen in 15 to 20 years.
We're already seeing, you and I have seen
Guaranteed.
it. Crazy.
Guaranteed.
Yeah.
A lot of these deals are going to be exclusive. A lot of these deals are going to be off market. As a REIN member, your duty is to network.
Mm-hmm.
Your duty is to engage each other as a community to make sure you find, uncover, and be able to take advantage of deals now. Money is made when you buy real estate. A mortgage is nothing but a tool of acquisition of real estate. So the interest rate will be what it will be. Maybe there will be a VTB. Maybe there will be a creative situation.
Mm-hmm.
But now I'm seeing it. I know what's coming. And I will tell you the message here is wake up, smell the coffee, get ready, take a break, get ready, but connect with others, find the deals. Millions will be made in the next 6 months. Millions.
Beautiful. Simeon, and I know you're going away on a well-earned vacation, so enjoy your time away. Thanks for spending a little bit of time with us here today. Appreciate it always.
God bless you. Love to all. Enjoy the rest of your summer, guys. Thank you.